Tick Pulse is our latest and one of our favorite trading systems. I want to show you how the money management algorithms work and exactly how to interpret the entries for those money management algorithms. So, as usual, this is an offline version of TradeStation. We're offline right now on one computer. Oftentimes have a separate research platform from a live platform. So you see yesterday's trade, but you don't see live updates today. Currently, the strategy is long from 37, 21, 37, 25. And so let's take a look at the original strategy. We're on 15-second charts. We have 14 months of data. We don't have as much historical data when you go sub 1 minute, but here is the equity curve, nice equity curve, and I click on this and you see 64.84 average trade profit. And as always, one of our main things that we want to do on a day trade system for any strategy really is to increase the average trade profit, and also without sacrificing increased drawdowns. Drawdown 33.62.50. In 518 trades, 33,587.50 total net profit. Net profit as a percentage of drawdown is $998. And so we put in our indicator here on the left side. You see the Tick 1 save, which is the indicator you use for sub 1 minute charts. And on the right hand side, we have our money management algorithm. I'm going to show you the inputs for that. But I'll first take a look at the results. So I click on this window, and then the performance summary will update. So you get 32,350. The average trade profit goes up by about $4. The net profit as a percentage drawdown goes up a little bit, and so there's an incremental gain. There are less trades, about 50 less trades approximately than the main strategy, because we're waiting to get in a slightly better price on the algorithm. I'm going to show you how that works. But so there's an incremental gain. When you have an equity curve that looks really good to begin with, sometimes it's difficult to improve the results, but we've had a little bit of an incremental gain. You see here on the average trade profit, and the net profit as a percentage of drawdown goes up. And so this is a more frequent, higher frequency strategy than what we typically trade. And taking a look at the Tick 1 equity curve algorithm revision 7.0, what we're doing here is we use the Pinpoint Entry 2. You see the entry techniques? There's 4 different entry techniques. The limit entry, the market entry, the stop entry, and the pinpoint entry. And the limit entry is basically once the equity curve management algorithm requirements are met, the equity curve, for example, the moving average is up, then we just get on the very next bar at the close minus limit entry points for longs, at the close plus limit entry points for shorts. So if you wanted to use the limit entry algorithm, you'd set this to 1. And if you just wanted to make it at the close, the limit at the close of the previous bar, you just set that to 0, or you could say 1 point, 2 point, 3 point. The more points you add here, the fewer trades you will get. And so you can be if you're overly selective, you won't get as many trades. Now the market entry doesn't have a second input. Limit entry has an input for limit entry points. The market entry just has, you just get into the market. Once the criteria is met, it could be at the market. And these don't take into consideration where the original strategy, the price of the original strategy where it entered. Now the stop entry is similar to the limit entry. So if we get in, if we set this to 1, you have to set each of these to 1. You should only set limit entry, market entry, stop entry, or pinpoint entry to 1. You shouldn't have you should not have a combination of these. And so if you set the stop entry to 1, then it will get on the next bar once the criteria is met for the equity curve algorithm. Again, the example of the moving average. If the moving average is up and you get a trade signal, then you get in the next bar once this is set to 1 at the close plus stop entry points for longs, at the close minus stop entry points for shorts. And so again, it depends on the interval of your bars that you're taking a look at, but if you have 1 minute bars or 15-second bars and you make this too many points, you won't get in, you will miss a lot of trades. And so for example, close, if you set this to 1, you want to get in a stop of at the close plus 0 points, or 1 tick or 2 tick at the most if you have if your bar intervals are very small time frames. If you have larger time frames, 15-minute, 60-minute bars, then you could get in. You could add more points here, and you would have more time to get in. Now the pinpoint entry is it waits for the algorithm rules to be true, but it also looks at the price of the original strategy on the left, the entry price. So if the entry price was, say, 21.36, then it's requiring us to get in at 21.36 minus 0.5 for longs, or 21.36 plus 0.5 for shorts. If you set it up this way, you could set this to 0, and that would mean you have to get in. You're requiring the algorithm to get in at the exact same price as the original strategy on the left if you set this to 0. If you set it to, say we're looking at the E-mini S&P, so 0.25 to get in at 1 tick better, 0.5 to get in at half a point better, 0.75 to get in at 3 ticks better. You set this to 1 to get in at 4 ticks better, so on and so forth. And so for tick pulses is what we did. We set this up so we get in at half a point better than the original strategy. Now what algorithm rule did we choose? The open equity of the moving average. And so the open equity, which updates every bar, has to be up for us to get in, and we have to get in at half a point better than the original strategy. And we scroll down, and it's the moving average, and we go down and see how many bars is the moving average looking at. 5 and 25 is what we found to work well for this. So it's the 5 and 25 moving average. Pretty fast switch when you compare 5 bars to 25 bars, and so it's very responsive. And we don't use the maximum daily entries. If you use maximum daily entries, you set that to true. You could say max daily entries is 1 or 2 or 3 or however many max daily entries you would allow. We just go with the original system. Whatever it trades, we trade. Entry time, you could use that here. You don't actually have to use it because it won't take trades unless the original system trades, but you could limit it. And we just use basically the same start and finish time, and as well as the exit time as the original strategy. We use the same stop loss and profit target as the original strategy, although we could change that. We could say, well, since we're getting in at half a tick better, we could set the stop loss at 475 instead of 500 and set the profit target to 625 instead of 600 since we get in at half a tick better. And so we also have sync exit with master. If the master strategy gets out, we get out. So it should sync up anyways with those settings, except for the fact that, the stop loss, the original strategy could get stopped out, while our strategy is not stopped out because it got in at half a tick better. So if for example, the original strategy got in at 21.3650, the market went down to 21.2650, but we got in on the algorithm at 21.36, our stop loss would be at 21.26 instead of at 21.2650. So if the original strategy got stopped out the low on the very next bar, we would still get out because we're syncing the exit with the master. So you can set that to 0 if you don't want to sync up with the master strategy, or if you just change the stop loss to compensate for the point differential of the entry, say 475, then the stop losses would be the same. So there's a lot of different settings you could set this up. Strategy up with the money management algorithm. We're going to take a look at the last trade, so you can take a look at that. And so over here on the original strategy, original trade, we get in at 21. This is yesterday's trade, October the 18th, 21.36. And so the money management algorithm would have gotten in at 21.3550, which it did. It entered in at 21.3550. You may not see that. The data bar may be off the video screen, but it got in at 21.3550, and it's kind of a dead day, so to speak. Just kind of a slow grinding pullback day, not much trend. It exited at the open of the 1600 and 15-second bar, 21.33.25. And since we have the same exit time over here, we exited at the same price, 21.33.25. And so this is an example of how the money management algorithm worked. And it's not necessarily always going to get in just a half a point better. Sometimes it will get in at a better price than half a point better, because it could pull back and then the equity curve algorithm could be false. And so it may not get in right away at just a half a point better. It may wait for a bigger pullback. And then if it's still a half a point better and the equity curve algorithm is true, it may end up getting in at a slightly better price. And so that is how the money management algorithms work on a more high frequency strategy. 469 trades is quite a bit of trades for 14 months of data. The first trade on this strategy is back to September of 2015, and we're in October the 18th, so about 14 months of data. So quite a bit of trades, and this number is a good number, very good number. Really, anything over 50 for a day trade E-mini S&P system is pretty good. And so we're approaching 70 here on this many trades, and so I'm happy with this strategy, low drawdown, and that is tick pulse using the money management algorithms.